Warren Buffett knows what he's talking about.
Don't you mean Warren Buffett?
A lot of heat for that. Do you hold Tesla?
Oh yeah, it's a big portion of my portfolio.
Yeah, see, I've been doing the bull bear case with it with a lot of people, and I finally took my entire position off the table. Maybe I should have held on to a little bit and maybe just do what ARK does, and every time it goes up too much, just keep scaling and scaling down, which is what I've pretty much done with it. I don't know, man. I have a hard time with the valuation metrics behind Tesla. It's I can no longer wrap my head around it to the point where I'm not sleeping easy at night, and I'm like, I got to get out. I think I sold my. I was out at 6:30. 6:30 was my last sell.
It's a good exit point.
Yeah, it's still going though. It's still going.
Yeah, it is. It doesn't seem to stop. It's the valuation makes no sense, and I think we're seeing that with a lot of companies. And I also think there's a shift going on in valuation itself. I know you've talked about it before. You know, if you were buying Apple, I don't know the amount of years ago, but or even Google, Amazon's probably a better example. Valuation didn't make sense at first, you know, but because these are technology companies, and it seems like capital grows at such a high expansion rate that they tend to kind of like grow into their shoes a little bit quicker than you can see with a consumer goods company or kind of using the older school metrics. Is that kind of something you've seen as well?
To some degree, but when we're talking about valuation, like the only time Apple and these companies were trading at absurd valuations was typically back in the .com bubble. Amazon, even at the valuations when they were absurd, they weren't nearly as absurd as Tesla is right now. Tesla trades at what? Like it's a 13 or 1400 PE. Easily, that means, and its growth rate right now, year over year, has only been 15 to 20%. And a lot of people, I think, are under realizing the fact that companies can't grow at a 700 to 800% rate year after year unless the growth, like you're saying, starts to double or something absurd happens. And that is not going to happen with Tesla until self-driving comes into play, until like everyone loves the idea of the battery walls and the solar roofs, but the growth rate there isn't enough right now to compound the idea that the future is going to be substantial when you have a lot of competitors in that space right now. I mean, the battery walls, every utility right now is getting into solar, is getting into wind. Even BP, these big oil conglomerates people think are terrible companies, also have massive projects in oil, wind, etc. So my biggest fear with Tesla right now is the fact that it's priced in easily the next 5 years and likely the next 10 years. Because again, how do you value these businesses, right? Like typically the idea is you want to value a company over the lifetime expected return, but you can't have a company that is already worth more than Uber and Lyft and like the top 10 car companies when they don't sell a quarter of a 20 or 30th of the vehicles they need to be. And then on top of that, you don't have self-driving. You don't know what the taxi network's going to look like. You have competitors coming into the place. And obviously, you know, Apple might not be, these other companies might be lower competitors, but give it 5 years while Tesla catches up to its market cap. And, you know, Apple and Google self-driving might be just as capable, and they're going to own some dominating market share there as well. So for me, particularly, like I said, I have a hard time wrapping my head around the business at this point because I hate when listening to bull case on Tesla right now because everyone's like self-driving, this and that. It's like, okay, well, when is that going to happen? Is it going to be a year from now? Is it going to be 5 years from now? Yeah, they introduce self-driving next year. Then when is it government regulated and these companies become taxi networks? And then again, everyone's like, these aren't car companies, they're technology companies. Then why do we care so much about deliveries? Every earnings right now is all about car deliveries, car deliveries. And it's like, but it's not a car company, right? Like, where's the tech money coming in? When does the tech come into play? Well, they're going to be in insurance too. And it's like, okay, well, they're already worth all of the, like I can't understand the valuation metrics until something happens. And I tell people this, until I can understand it, I will pay the premium to get back in. I got no problem paying a premium to buy back into a company once it's proven something. But again, we're on different time frames too than most people. Most people buying it in today are buying into it with FOMO, with the hype, with everything. When I was buying Tesla, no one gave a shit. Tesla dropped 50% almost a week after I bought it. I bought it at 300. Media came out. They said, forget Tesla. It's a terrible company. It dropped to $1.50 a share or $1.70, right? And then I started accumulating a little more and nobody gave a crap. And now everybody and their grandmother wants to own it, which is usually a good signal for me to be like, okay, let's take a breath here because there's just too much. Way too much going on here. And people are like drunk in love with this company. Like the bull case is just drunk. Like look at Hyperchange. Look at any of these YouTube channels that, I mean, their market cap changes overnight. Like, I mean, I remember Hyperchange saying these are $2 billion companies. And I'm like, that's fair. If Tesla's going to be a $2 trillion company in the next 10 years and compete with Apple, that means my likely upside potential is 4x from here. If I hold it at 500-600 a share, that means it could go to, you know, 2,000 a share. That'll put it at a $2 trillion market cap. So that means I'm sitting on an 800% gain today from when I bought it, and my upside potential is only 4x. I don't want to risk the 800% I got for another 400% or whatever, you know? So I'm gonna put the 400% and say, forget it. There's just too much risk to make that in the short term when I'm already sitting on this much. So I took it off the table, right? And now I just want to see how it plays out. If it plays out, self-driving happens, we start seeing insurance and all of that scale and become a reality, then yeah, maybe I'll buy back in. But for right now, like just at a risk tolerance and from being in it for so long, I don't like seeing people like Hyperchange go from a $2 trillion market cap to being like, this is a $10 trillion company. I'm like, I could say that about every company. If I said that about Apple, technically Apple should be worth, you know, like 10 or 15 trillion if we're talking about playing in, you know, and I think Apple has a more sound company. I mean, if they compete with self-driving, I mean, how do you if you look at Tesla, it makes it impossible to value other tech companies, because if Tesla can be valued at this, why is Apple trading at a 40 PE? It should be at 100 PE. Why is Amazon, like, why are these companies trading at 30 PEs? They should be through the roof technically, because they're better companies. They have more likelihood of future potential. They have billions of dollars in the bank, not billions, like tens of billions, 50 billion plus. So it's like, if you have that kind of gunpowder and that kind of resiliency, why do they trade so low in comparison? Which comes back to the point of FOMO, right? People don't have FOMO about Apple, but they're having FOMO about a company that doesn't have, you know, they raise capital. They're just raising. They're not producing, right? So that's my take.
I like it. It's hard to disagree with a lot of things that you're saying. And one thing I've always said is I fully understand and you know, take the risk that it is extremely overvalued at this point. There's no doubt about it. And I think the one thing Tesla has that other companies don't is this crazy fan base of people that want to own the stock and want to own the product. But right now, they're not producing product at a rate or probably at a price that a lot of people kind of can get in at, which is interesting because we look at a company like Apple, and I think in the future, potentially Tesla, if we want to talk about it in this way, could be like the Apple of the car industry. And what I mean by that is unless something drastic changes, I'm not switching from an iPhone to an Android or a Samsung. I don't know what kind of phone you have, but I can't go back from the iPhone, and everything that Apple makes has been a home run. And yeah, they're slowing down a little bit in terms of their technological advancements, but now they're, you know, saying they might have a car, whatever. We'll see how that plays out.
I think it's a mistake to say that, because we had this argument on our stream last night, because I don't think people realize how disruptive the M1 chip is. It is forcing Intel to evolve the way their chip maker, like they're still evolving. And again, like your bull case on Apple is the idea of like the branding is so powerful that there still could be huge upside potential. I'm not saying that like you can't buy Tesla today and make a lot of money. Like there's still huge upside capability. It's just, from my perspective, from being in it for so long, being up so much, the risk tolerance for me doesn't make sense. But like you're saying, like the fan base could be so strong, the branding power, like Nike, could be so powerful that it could just keep sending the stock higher, and there's nothing that could stop that potentially. But again, the higher it goes up, the more risk there is. That's the way you got to look at it. If it doubles again next year, like your risk gets more and more exponential as the company's revenues don't keep up. So that's some of the risk. But like I said, I got nothing against the company. I think it's one of the greatest companies on the planet. I think long term it's going to be one of the greatest growth stories in history. I mean, I'm not bearish on the company by any means. I just think there's a big dislocation between value metrics right now that have to catch up or have to reevaluate. And I don't know how that happens. I don't know if the fan base is so strong that it never comes down, which is a possibility. And I'm willing to take that loss if that happens. Like if I don't have shares anymore, so it keeps going up. I mean, I'm losing all that extra income I could have had by holding on.